Hey guys, welcome back. In this video, we are going to discuss an introduction to ratio analysis. We will discuss the importance of ratio analysis, what is the need of ratio analysis, and the different approach like the traditional as well as functional ratio analysis. Okay, so this is basically an introduction video on ratio analysis. In our next video, we will discuss different ratio analysis with the suitable example as well. Okay. So first question is like if you're a beginner for finance subject. Okay. So now the question is what is ratio analysis? Okay. So ratio analysis basically we can say these are mathematical numbers. Okay. So like when we study accountancy, so we have profit and loss account or profit and loss, or we study the balance sheet. So these are very heavy documents. Okay. So now if you have to understand any company's performance or the areas of that particular business need more attention, or the potential area which can be improvised, or the liquidity or the solvency or the profitability of any organization or any company. So you can use different ratios. Okay, or you can do a ratio analysis of a company. So which these are like we have certain formulas. So these are generally based on the profit and loss account or the balance sheet of any business. So on the basis of the outcome of P&L or balance sheet, so we use these particular numbers and we come with some outcomes, so we can check the overall profitability of a firm, or the overall liquidity of a firm, or how that particular business will do in long term. Okay, and even you can also do the cross sectional analysis as well. Okay, like we have different departments or different products of any company, so how these particular products are doing, so that is generally based on your ratio analysis. Okay, so ratio analysis is a quantitative procedure of obtaining firms functional efficiency, liquidity, revenues, profitability by analyzing the financial record and statements. Financial record and statement means the profit and loss account or the balance sheet. So as I told you, like when you study the P&L account of any business, or if you study the balance sheet of any business, so these are very heavy documents. Okay, so like we have the final outcome of these particular documents. So on the basis of these final outcomes, we can quickly, with by using some formulas, we can quickly analyze the overall profitability of any firm, or the efficiency or the liquidity or the overall revenues or the past performance of any company. Okay, so it is a technique which involve regrouping of data by applications of arithmetical relationship through its interpretation is a complex matter. So like balance sheet, you have so many entries, or P&L account, you have so many entries. So on the basis of their outcome, you can by using simple formulas, you can ease these complex calculations by using a ratio analysis. Okay, so basically we can say it make our life easier to understand the overall business operation of any company, or even we can say by using different ratios, investor they can easily analyze, or they can do analysis about any firm or business. Okay, so now the question is what are the objective of this ratio analysis. So as I already told you, you can check the profitability of any firm, or even like being a businessman or being a owner of any company, you can also do cross functional analysis, or the key potentials of that particular business, so we can focus on those particular areas, or the key challenges. Okay, so which we are facing towards the overall operation of any business, or toward the revenue generation, or toward the day-to-day functioning of any organization, or to deal with short-term as well as long-term debt. So these are some key objective of this ratio analysis. Okay, so to know the areas of business which need more attention, so on the basis of functional ratios, so you can calculate that particular one. To know about the potential areas which can be improved with the efforts in the desired direction. So let's say if you use the different ratios, so you can also know the potential areas, like which are the focus areas for that particular business. So you can calculate it, provide a deeper analysis of profitability of a firm, liquidity status of that particular firm or business, solvency, how that particular business can deal with long-term debts or the long-term debt position of any company, efficiency level, how that particular firm is utilizing their resources in a maximum way. So we have so many importance of these particular ratios, and they generally help business owners to do business in an efficient way, or even they can also help the investors while they opt or we can say while they generally made their investment decision. Okay, so to improve information for cross sectional analysis by by comparing the performance with the best standard in the industry. So even like when you you can use earning per share to for the performance analysis of different company shares. So after the outcome, you can make your investment decision which company to opt for the investment or which to ignore. Okay, to provide information derived from financial statement useful for making projection and estimate for the future. So after the outcome of these like balance sheet, PNL accounts, so you can also make projections which are the key focus areas where we can invest more, or which are the areas we can leave behind. So there are so many objectives which can be achieved by using ratio analysis. Okay, now if you talk about the type of ratio analysis or the types of ratios, so these are further categorized into two part. One is traditional classification. So nowadays we do not use traditional classification, we use functional classification. So traditional class, if you talk about the traditional classification, so here we have three different ratios, like we have balance sheet ratio, we have statement of profit and loss ratios, we have a composite which is a combination of balance sheet and as well as P&L account. Okay, and in case of the functional, so I hope you guys heard about the liquidity ratio, the solvency ratio, activity ratio or turnover ratio. We have a market prospect ratio, profitability ratio of a firm. So these are generally comes under the functional classification of ratio analysis. So most of time we generally heard about these particular one because they are like most of time investor as well as firms, they use functional classification to do the ratio analysis of any company. Okay, so first one is traditional classification. So as I told you, so these are like we have three major ratios under traditional classification. First one is statement of profit and loss ratio. So a ratio of two variable which is profit and loss. So on the basis of profit and loss of any firm, we generally make analysis. So that is statement of profit and loss ratio. Balance sheet ratio, on the basis of balance sheet components which are which is assets and liabilities of any firm. So on the basis of the assets and liabilities the comparison, so that is balance sheet ratio. And composite ratio, so composite is basically combination of these two. One is statement of profit and loss, another one is balance sheet ratio. Okay, so if a ratio is computed with one variable from the statement of profit and loss, and the another one is from the balance sheet, so this ratio is generally known as composite ratio. But nowadays we do not use the traditional approach of ratio analysis. We generally work on or we generally do analysis of any firm or business by using functional classification. So here we have number of ratios which generally help you to analyze the performance or the profit, to calculate the profitability, to calculate the revenue or to calculate the solvency of any business in long term. So we have different, like we have liquidity ratio, we have solvency ratio, we have turnover or activity ratio, profitability ratio, market prospect ratio, which is most of time used by the investors, those who generally invest in equities or shares of any company. Okay, so these are the most important ratios under ratio analysis. Okay, so first one is liquidity ratio. So liquidity ratio are helpful to determine the ability of company to meet its debt obligation by using current asset. So I hope you heard about the current ratio, cash ratio, quick ratio, net working capital ratio. So these are generally comes under liquidity ratio. So with the help of liquidity ratio, anyone who is making this analysis, they'll know the company's debt obligation, how they are treating their debt obligation in short run, or how they'll meet their debt obligation in short term. Okay, by using current ratio, cash ratio, quick ratio, net working capital ratio. So these are the major ratios which generally comes under liquidity ratio. Okay, we will discuss these particular ratios in detail, like what is current ratio or cash ratio or quick ratio, and what is the formula, and with some cases as well. Okay, next one, solvency ratio. So solvency ratio is used to determine the viability of a company in long term. So how that particular company is dealing with their long term debt. So that is generally part of your solvency ratio. So like we have debt to equity ratio, we have equity ratio and interest coverage ratio. So they generally comes under solvency ratio. So solvency is basically, we can say, it determine the long term viability of any organization or firm. Okay, so how they are how they are treating their long term debt, that is generally part of solvency ratio. Next one, activity ratio, that is something related to the overall functionality of any business. So how efficiently they are using their resources, that is generally part of your activity ratio. So activity ratio are used to measure the efficiency of business activities. It determines how the business is using available resources to generate maximum possible revenue. Okay, so let's say if you have manpower, if you have machinery and all, so how effectively or how efficiently you are using these particular assets. So that is generally calculated on the basis of activity ratio. Okay, so with the help of these particular ratios, being a businessman or being a owner of a company or firm, you can improvise the overall efficiency of your assets. Okay, next one, profitability ratio. So if you talk about the profitability ratio, so how that particular firm is generating profit over the period. Okay, so that is profitability ratio. So to determine the ability of a company to earn profit, when compared to other expenses. Okay, so to their expenses. So how you are using your resources, and how that particular company can generate or make profit, or how they are generally using their assets, and how what is the outcome of these particular asset, and how to improvise the overall profitability of a firm. Okay, next one is market prospect ratio. This is again where, under this particular one, we have so many ratios, and these are very important one, because most of time investor, they generally use market prospect. So what is the market prospect about any firm? So for that one, you can use, in case of bonds, you can use dividend yield. In case of shares, you can use earning per share, or price to earning, or dividend payout ratio of any company. So these are the major ratios which generally comes under market prospect ratio. So market prospect ratio help the investor to predict how much they'll earn from a specific investment done in shares, bonds, or other companies. Okay, so it is basically, if you talk about the market prospect ratio, with the help of these ratios, you can make analysis which company to opt. Let's say you have number of companies for investment, so which company like which is the best alternative of investment, or which company you should opt for investment. So that is generally we define through a market prospect ratio. I hope you guys heard about the EPS, earning per share. So many times when you make investment in when you make a long term investment in shares, we generally use EPS ratio. Okay, when you invest in bonds, we talk about dividend yield. Okay, so yield is basically written on the investment from bonds. Okay, so market prospect is basically, it is these ratios that generally provide the overall the overall performance of any company's shares, or debt issued by these particular companies, okay. So guys, basically this was an introduction video about ratio analysis. What is the importance of ratios, or what is the need of ratios for ratio analysis for firm, for investors, or even the objective or the different time. Because like in next video, which is the most important video about the ratio analysis, where we'll discuss these functional ratios in detail, like as I told you about the liquidity ratio and the different type of liquidity ratios, or solvency ratios, activity, profitability, market prospect. So we will discuss these particular one and the different ratios under these particular categories with some cases. So that will give you more specific knowledge toward the analysis. Okay, and if you talk about the examination viewpoint, so this video is generally just to build your concept toward the ratio analysis. So it do not have that much of importance toward your examinations viewpoint. But if you talk about the next or part 2, which is based on the calculations or the formulas and all, so that is very important. Like examiner will give you some number or some cases, and then you have to calculate the quick ratio or the acid test ratio or the debt to equity ratio. So you need to know the formula as well as the basic understanding. But for understanding these particular things, you need a proper knowledge. So what is ratio analysis, how we generally use, what is functional and traditional approach, or what is liquidity ratio, what comes under liquidity ratio, what is the motive of liquidity ratio. So that's why I did an introduction video about ratio analysis. So I'll see you in the next video where we will discuss these particular point in detail, and which will definitely going to help you in towards your preparation of ratio analysis. And believe me guys, whenever you study finance, so ratio analysis is one of the most important topic, because examiner they generally give you a 2 marks question based on simple question. So if you have a basic knowledge about if you know the formula, if you know the basic of that particular ratio, so you can easily calculate that particular data as well. Okay, so I hope you find this particular video useful. If you like, please do share with your friends so they can also watch. And if you are new to my channel, please do subscribe. So thanks for the watching this video. Stay tuned. I'll come with more videos so you can score well in your upcoming examination. Thank you. Have a nice day.